Hey guys, today I'm gonna be talking about exciting topic for me, about how much will give you investing small amounts returns in a long term. So basically about compound interests. Most people think that £100 a week is nothing, but they are wrong. And it's not about getting rich quick. It's about the time. £100 a week is £5,200 a year. So over 5 years, with if you assume 7% returns, which is conservative, average, and very realistic from a broad stock market, so ETFs like whole world or even SP500, but whole world, in my opinion, is a bit better. Then in 5 years, you will have around £22,000 invested and around 4,800 returns of pounds return. So if you look on 10 years, twice longer, you would think the returns will be twice bigger, right? So it was 4,800 will be, let's say, 9 grand, right? No, because of compound interests. So interest on your interests and longer time to grow, it will be over £22,000. So 4 times more than just for the 5 years, and it's only twice times longer. And the fun begins even after that. If you invest for 15 years, this £100 a week, I don't know if I said before, it's a week, not a month, yeah, a week, then after 15 years, your return, your clean profit, if it would be in stocks and shares ISA, so it's untaxed, then your clean profit after 15 years would be £56,000. So over 10 times more, actually over 11 times more than after 5 years. It's 3 times longer and 11 times more returns. So that's why starting early is so important. People trying to rush and lose money. That's what I was doing, yeah, trying trading or meme coins, you know, like crypto crazy coins, jumping on any trend that was there, you know, trying to make money of it. Yeah, that's the one, making money from small amounts that I was able to invest. I was hoping I will do this quick with leverage, so I was trying as well with forex trading, yeah, so trading on currencies. The leverages there, I even found not in UK. Yeah, I had to, you know, juggle a bit and lie a bit, let's say, which makes me very vulnerable if the money would get lost, because I would have no help from Financial Conduct Authority, because I was trading in Australia, living in UK, and there I've got leverage. I think it was 500 was the highest, but I've seen 1000 x. So you think I'm gonna make 500 times or 1000 times quicker the money than I would without this leverage, but it means you're gonna lose this money 1000 times quicker than you would without leverage. Yeah, that's just important bit. So this is boring. The £100 a week or whatever you can afford a week, regular, over the long term, with small returns but reliable, that's boring, but that is something that actually works. Of course, it's never like that it will be always just going up, right? And exactly 7% every year, or, you know, some argue it could be even 12%, but never mind. Let's say that's what I believe in, conservative 7%. That's how I count my future money. Who doesn't like to count money that he doesn't have, right? Yeah, I therefore like numbers. So yeah, that 7% is very boring, but it's never exactly 7%. Last year I made 14%. This year, for first half, because of what Orange Man is doing, I'm sorry if that, never mind, what the guy in USA is doing, I was actually down for some time, which means when you invest weekly and it's only stalling like it was in the last few months, it means that I was still in a lot of profit, because the profits from the very beginning that you started investing a few years ago, they are so high that your weighted profits outperform even 20% drop, which means at the moment I'm like 17% after 2 years roughly of this regular that I was doing on this account, main account, for the long-term investing. I've got different ones as well where like accounts where I try with small amounts with picking stocks, which actually is doing very good, but never mind. That's the one that is risky. Or for example, for the Bitcoin, so from crypto, my partner, my girlfriend, she keeps Bitcoin and Ethereum. I keep only Bitcoin, and together we are keeping as well account with Bitcoin. And yeah, so that's how it looks. It's more than one account. I need to somehow feed my let's say gambler personality if I wanna make kind of quicker profits, or I don't know, try something, you know, because I think that company will blow up. I actually, because of Tesla, because of crypto, I had money for deposit for my house, so it did work out. And luckily I needed this money for deposit, so I sold, because if I wouldn't need this money for deposit, I wouldn't sell, and I would be probably down on the investments I had. It wasn't Bitcoin, it was some, what was it mostly? I don't even remember at the moment. I think it was Shiba Inu or something like that. Yeah, some meme coins and stupid stuff like that. Never mind. Anyway, well, Tesla, okay, Tesla would pay out, but then it would stall for a long time as well. Never mind. So if you're not investing yet, start with anything, even like 20 quid a week. Consistency will beat everything. And best is to automate it. So make it automatic from your account, that it goes, that you don't have to remember, you don't have to make this move. That makes it much easier. And make it small amount for on beginning, that you know, people spend like 10 quid a day for food at work, right? Or more even. So let's say tenner a week. It's nothing. And just look on the percentages over the time. When you get into it, when you start understanding it more, you're gonna probably, the shift will happen, you know, in your brain. The shift will happen. It happened for me. I really hope for everyone to basically prepare himself for the future like that. So yeah, if you wanna play a little bit with this compound interest calculator, I've got link in description on the very bottom under my ref links. If you want to use any of them as well, please be my guest. Click the link, go to the website. I've got nothing from it. It's just, you know, website with online calculator. Put your numbers and play around a little bit. Look for the longer times. That's how I counted that I will probably retire when I'm 57. That's the latest I'm gonna be ready for sure. I might be ready before that, because I'm assuming low returns, like only 7%. But yeah, but that's the latest. 57 years old, so it, at the moment in 15.5 years, something like that. Okay, please subscribe, and I wish you a very nice day. Thanks.